Good morning and welcome everybody to Planet MicroCap 2024. Let's give a round of applause to our next presenter, Russell Starr from DeFi Technologies.
Woo. Thanks, everyone. Actually, there aren't a lot of familiar faces, so this should be good. First and foremost, before I get going, our business is in listing crypto protocols on traditional exchanges. We're a fintech company. We're not a crypto company. This is a simple ETF business being driven out of Europe. I just want everybody aware of that, and I'll explain what our key differentiator is versus a BlackRock or a Fido or whatnot. But I just want everyone aware, like, don't be terrified about crypto and wallets and all that kind of stuff. This is TradFi, traditional finance. Forward-looking statement, of course. I'm not going to go through it. You guys probably have been inundated with this for decades. So who are we and what do we do? DeFi Technologies sits on top of basically four baskets. One basket is Valor. We own 100% of it. That's where we list all of our exchange-traded products in Europe. So we have about 20 products, basically ETFs, listed in Europe already: Cardano, Polkadot, Solana. So while everyone is watching the fanfare of the Bitcoin ETF, now the most successful ETF ever in the history of ETFs in the US, we've actually been doing this for 3 years in Europe. And where we really kick it out of the park is BlackRock lives off of a management fee. Management fees are race to zero, that they're going to disappear. Where we have what I call a revenue model on steroids, we actually have the ability to stake all of our assets. So it's kind of like securities lending, but we earn about 7.5% on our AUM. So we have about 650 million US in AUM right now. Imagine that goes to $1 billion. At $1 billion, we make 7.5% or 75 million US in revenue. We've guided to about 50 million US in revenue this year, and our all-in costs, everything included, operations. We have some debt associated with this position right here. This is a private crypto Swiss bank that's probably tripled in value, but that debt is associated with that position. But including debt, including operating expenses, 12 million US. That does not change. So the more our AUM grows, our yield doesn't shrink at all. We continue to earn that 7.5%. We get to $1 billion, 75 million less 12, 63 million in profit. 2 billion, 150 million in revenue, less 12 million, 138 million in profit. As we sit today, literally like just today, DeFi listed in Canada on the CBOE, DEFTF in the US, OTC, unfortunately. Sorry about that, guys, but it's just part of the way things go. We've guided to about 50 million US in revenue this year, 38 million in profit, and our market cap's about 150 million. So we're trading at about 5 times profits and maybe 6 times revenues. And that's something I'm going to harp on because most of you guys are familiar with miners. Miners haven't made a penny yet. They're not cash flow positive. They have to acquire all of their infrastructure. They're often raising money all the time. We probably never raise money again. Rest of the business. Amina position, that's about a $50 million US position in a private crypto Swiss bank. Guys are all familiar with Silvergate and SVB. They went under in the last sort of banking crisis. These are legit crypto and private Swiss banks. Never even came close to going under. We invested when they had $1 billion in AUM. They now have $3 billion in AUM. They've opened offices in Hong Kong and the Middle East. This is a really strategic position. The regulator won't let us mark it up. We have to carry that cost. They'll let us mark it down. They'll never let us mark it up. I often joke the only regulator that's worse in the world than the SEC towards crypto is the Canadian regulator. It's a bit frustrating. Then we have a venture portfolio. This company here is Anthony Pompliano's company. We bought it, so Anthony works with us, for us. He's a tremendous, I say this with respect, mouthpiece in the US. Most of you have seen him on CNBC. We identify early stage protocols that we think might make it into one of our ETFs moving later. We only usually invest 100 grand, but they're often 5, 6, 7, 10, 20 baggers. We just exited from a 3IQ position, which was an 800% return, literally just a couple of days ago. This is the team. I'll point out Ollie Russi-Newton. He's the founder and creator of Hive Blockchain. So this is a legitimate management team. Sue Ennis is with Hut 8. We have a senior partner from a law firm, Christian Toth. Obviously, I'm there. Johan Wattenstrom, our other founder, is the founder of CoinShares, which would be another very familiar household name to you. So this is, we're not recreating the wheel here. We're just operating in a jurisdiction that actually loves and wants crypto. We've announced that we're moving into the Middle East. We're passporting all our prospectuses to the Middle East. We're passporting them all to the London Stock Exchange now that they're allowing the trading of crypto ETPs. So, one of our investors, a fund investor, said to me the other day, he's like, I really like your business model because whether crypto is going up or down, you actually have organic growth. You're launching new products. You're moving into new jurisdictions. You don't have to worry about the SEC. You don't have to worry about all kind of the garbage that's going on in the courts. And we just want to keep growing. So we get, like I said, we get to $1 billion, $75 million. We get to $2 billion, $150 million. Very, very, very simple math. Share structure, in my opinion, I'm an ex-banker, master's in economics, started a firm called Echelon. I love share counts in and around 150 to 200 million, but we had to suffer through what is called the crypto winter. So the share structure is a bit bigger, but I mean, you guys can do the math. It just means more liquidity, and it doesn't really change how you do your mathematical valuation. All of those warrants sit in insiders' hands, and it's really important that you guys note myself, Johan, and Ollie own between 100 and 120 million shares, just amongst us, friends, family, like close entities towards us. And we have a lot of cash on the balance sheet. So again, we're not going to be raising money. So what do we have? Here's some of our single asset ETPs. Solana's our biggest. Just to give you anecdotal information, we have about 350 million in our Solana ETP. We earn 10% on that. So we're going to make 30 to 35 million just on our Solana. We announced the first ever Bitcoin ETP that will pay you yield. I believe that will list next week. That will be, in my opinion, a game changer. Like, why would you own BlackRock and pay a management fee when you could own our ETP, pay no management fee, and have us pay you 2 or 3% yield? That's a really interesting novel concept. These are basket products, and I believe next week we're launching another 6 new products. And like I said, all of those products will go to the Middle East. We're moving to launch all our products in Asia as well, and then obviously in London too. Very importantly for you guys, have we ever had a down month? Do we lose our clients? Are our products stable? I mean, these are important questions. If you look at this, we've never had a month where we've lost clients month over month. Anybody who, it's really fascinating as a traditional finance guy, people buy these products and they never sell them. They are literally just buying them and holding them forever. And the beauty of our business model is, as someone buys our Solana ETP, we buy 1 Solana. It sits on the balance sheet against a liability for the client's ownership, but we then get to stake it and earn that 10% yield, and that's what flows up to DeFi. The regulatory moat for this company is about 3 years. I fully expect other people to start competing, but due to the fact that basically we just left the crypto winter, I believe we still have that 3 to 4 years. So I really don't see a ton of competition for at least a good 18 to 24 months, which obviously will allow us to expand our business globally and really push to just grow that AUM. And hopefully, if you think about it logically, the logical outcome is probably a takeout. I say that obviously with a grain of salt, and I'm a huge shareholder myself, but the BlackRocks of the world, the Fidos of the world, they don't really build these businesses. They buy them, they put them into their own basket, and then push them forward aggressively. Here's how we make our money. We also have another revenue stream. This ecosystem, this crypto ecosystem, the spreads are still really wide. So we have our own trading desk. We don't take proprietary positions. We don't we don't use margin or anything like that. But when we execute a trade for a client, they buy the Solana ETP, we buy the Solana, we take spread. And the spread that exists in the crypto market is what the spread would have been probably a decade or 15 years ago in traditional capital markets when I was, a salesperson and a trader, and a client would give me 5 cents or 10 cents on, buying Morgan Stanley shares. Today it's basis points. If you look at our products, you can see them all trading. You just go pull up their ISINs, go to the markets they're trading in. We're doing 10 to 15 million US of liquidity per day. At 10 million, we're making 32 grand just off of trading flows. No risk. I just put this together for fun, and clearly, yesterday and the day before there was a bit of a Bitcoin sell-off. It'll be really interesting to see what happens, because I think this is macro driven surrounding Powell, and is it going to be dovish? Isn't it going to be dovish? What's going on in the global capital markets? But this just shows you the power of our business model. You can see where the Middle East kicks in kind of in July, August. But if Bitcoin was to go to 100,000, which is still a possibility, I mean, I don't know. I've given up trying to forecast what it does. I just know it's survived like so many black swan events that it's here to stay. But if it was to go to 100,000 and the Middle East started to kick in a bit, we have about 15% month over month growth for our AUM. You could see us get to 90 million in profits this year. And again, when you're looking at a stock in my world, natural resources are great, but they're never cash flowing until they're in production, right? This is almost one of the first ever small cap companies where I've been able to stand up in front of people and say, look guys, this isn't just a growth business model. This is fundamentally really cheap. So I continue to buy, all my friends continue to buy, because 5 times profits doesn't last long. We've got research coverage. Zach's just put out research on us with a $3 US target. Benchmark, we're talking to a bunch of other US investment banks. Like I said, we won't be raising money. We will be looking to uplist onto the NYSE or the NASDAQ as soon as possible. We just need to get our share price moving, we've got Q1 coming up May 15th, and a pretty big and newsy week coming up next week. So I think we'll get there organically. I don't think we need to do a rollback. This should be trading at 15, 20 times profits. So with that, I'm going to stop and answer questions. I don't have anything to give anyone, but other than a great stock pick. Fire away, please. Yep. So we're on the NEO exchange, which is now owned by the CBOE, which is growing really, really quickly in the US. So the CBOE in Canada, and then we're on the OTC QX in the US, DEFTF. And we actually are quite liquid. We trade 300,000 to 800,000 shares a day. Come on, there's got to be some questions.
Yeah, just to know, because I always get meetings in 10 years. So you're showing like possible Bitcoin goes 100,000,
yep.
$6 million US. But you showed your market cap numbers. Was that Canadian or US?
The market cap that I showed you was Canadian. So US though, our stock price is 50 cents US and about 150 million US market cap.
150 million US market cap, and then if Bitcoin goes 100K.
Well, even if Bitcoin doesn't go to 100, if Bitcoin doesn't move and we don't launch another product this year and we stay at around 650 million in AUM, okay, we'll do 50 million in profit.
On 150 million market cap.
Yeah.
Okay.
Sorry, 40 million in profit, 50 in revenue. Okay. Minus that 12 or 38. So it's 4.55 times profits and 3 to 4 times revenues we're trading at.
About the most around regulations and you have the 3-year SR. Can you expand on the 3 different processes?
Yeah, it's hard. Regulators historically haven't liked this industry. They haven't liked this business. There was a lot of risk and negativity around, obviously, FTX, the stable coins that disjointed. But what's happened with us is two very meaningful data points. When the Bitcoin ETF was launched, our stock just went like this because it validated our business model. But just to give you context, from about 2017 to 2021, we were dealing with regulators to try to get these products permitted. And that's, reviewing prospectuses, do we have the risk management procedures set up in the background? How much cash do we have on our trading desk? All those small data points. So maybe it only takes someone else a year and a half now. Maybe it'll take them 2, maybe it'll take them 3, I don't know. But it just gives us the ability to execute and continue to generate massive AUM before either we get taken out or the... Basically what I'm saying is you got a pretty good 2-year trade window. And if we can actually just get to $1 billion or $2 billion, you'll do very well from a stock trading perspective. Make sense? Please.
Curious to know what the decision process was on which exchange to go to.
So CoinShares, which one of our founders created, was created in Scandinavia. And so we started in Scandinavia and then expanded to the rest of Europe. We've never wanted to go to the US other than to upgrade our equity listing because the SEC is, I always have to be so cautious, but they're disjointed. It's political. It's not sensible. So, there is a world where I can see us listing our products in the US, but, if they're not going to permit the Ethereum ETF, let's wait and see. And the rest of the world is massive. Like, think of it this way. Crypto adoption in the Middle East is like 30-40%. It's multitudes of what it is in the US. And you could argue that there's more money there. So, do you want to go nuts and bang your head against the wall in the US, or do you want to go to the Middle East where they'll passport and list all your products like this? So that's how we're working.
So in terms of coming to the CBOE then, is that basically the strategy in North America?
The CBOE just bought the exchange we were on in Canada called the NEO. And yes, the CBOE is a potential uplist in the US for the parent company, not for our products, but for our parent company. But it could be the NYSE and it could be the NASDAQ too. We just got to get the share price up to reasonable values, but I think the fundamentals support that. Please, anything goes. Macro, yeah. Yep. Well, so without getting into too much detail, because this is where it can get complicated, we actually now run our own validators. If you look at our press releases, we actually, the chief developer for Solana works for us now, and he's optimizing all of our staking. But when you get enough assets in a protocol, you can petition that foundation to run what's called a node or a validator. We now run all our validators, so we actually don't stake anything, so there's zero counterparty risk. So we've eliminated any staking counterparty risk just by running our own validators. So you put your coins onto your own validator, and people can use them, but we only let them be used for 3- and 4-day windows, and we can recall them at any time we want. But the best thing, honestly, this is what I do because I'm a TradFi guy. I just Google like validator versus staking, and there's so much information on it now. But that's basically the premise behind it. Yeah. Yeah.
You guys look at the liquidity pools on Uniswap, yield farming, like this.
We do it all. We do it all. So our Solana, we do airdrops, everything. That's how, like, most people only generate 5-6% on Solana. We're generating 10%. So yeah.
Okay. So, I've been reading your DNA for like years.
Yep.
So
we don't have, we don't. Perfect. So what's your name? Perfect. Looking forward to. So you texted me a couple times. Yeah. We'll figure it out. We'll figure it out.
Cool.
Yeah.
How do you decide what assets, new assets that are launched? What kind of qualifying criteria for each?
So our master prospectus allows us to do anything in the top 100 protocols. So we got a long way to go before we exhaust that. And like we just launched a Bitcoin short, so there's derivative products you can launch on them too. But one of the things we're doing now is so we can do the top 100. But we're also going to So you guys probably have never heard of Core. Core has never had to raise a penny in their life. They run a layer 2 protocol on Bitcoin, which is really, really unusual. Bitcoin, everybody thought would never offer the opportunity that Ethereum does to provide layer 2, layer 3 opportunities. No one really knows about these guys. So we went to them and we said, look, why don't we do an ETP on you? That'll help your exposure. In return for us giving you sort of an extra marketing tool, why don't you give us 40 million of your tokens? Just they're yours, but we get to stake them, so we generate revenue. We make 10% on that. That's another $4 million I haven't included in our revenue model. So that's another business model we're doing. We're going down to the bottom guys that really aren't known but are really cool. And part of the reason we can do that is because if you were to go to Reflexivity or Anthony Pompliano or Will Clemente, they're two of the world's foremost research analysts in the crypto space. And they help us identify, opportunities like SEI, which is another one. It's the fastest protocol in the world. No one's really heard of it. It's picking up, but we'll probably do an ETP on them as well, the same way I just described the Core.
When does the 4 million get to the model?
As soon as it's trading, we'll and that should be next week. We'll add that. So it's instead of that model that I showed you at the end was literally a model where I said the only thing that's moving is Bitcoin. We're not launching any new products. We're not including like it's basically just a static model with the price of Bitcoin going up and Middle East kicking in a bit. For the first time ever, we've started giving guidance, and on May 15th, don't be surprised if our Q1 surprises to the upside. I have no information, by the way. I'm just doing the math in my head, right? Like you just look at January, February, March, AUM, average 450 million. We're now at like 650 million. So Q2 is going to be even better. You just take that 450 average, multiply it by 7.5, you get the revenue. But I can see that surprising because we're eking out higher yields on a lot of these products. And you'll see these new cash flow items come into our model or our analysis, or you can just go look at Zacks or Benchmark's research and you'll see how they walk through sort of that organic growth model, which I haven't really included in here. Only got 3 minutes left. So if anybody else wants to, or we can expand more on your question if you want. Yep.
It's just, man, I think protect the coin once you're acquiring you hear about people getting hacked.
Yeah. So we only deal with the 3 largest custodians in the world. So Fido, Anchorage, Coinbase. The other beauty is that when you run your own validator, all your stuff sits on your validator. So you actually don't even have to go to a custodian. So we believe we're insulated from that. You've seen FTX, you've seen, B2C2, all that stuff. None of it's impaired or hurt us in any meaningful way, shape, or form. Anything, DJ? Are you good till we meet?
Well, I mean, the big issue was to talk about small, I've been doing this for years.
Yep.
And the problem is never the company, the problem is always the auditor.
Yep.
Is literally your auditor going to be allowed to, state the income that you have?
Yeah. Well, they just did. So we were forced, it's a good question. We were forced to change our auditor by the regulator last year. So we're at, I think they're called HDCPMA. And you got to look around because the regulators are so negative crypto in Canada and the US that a lot of auditors won't even do it. So we had to restate everything. We did it. There was a small change 2 years ago in the value of our SIBA Amina position, but everything came through constant. You'll see the income. You'll see, just how Q4 worked. If you go look at the audited financials, you'll see, a really terrible year up until like November, December, and then basically we broke almost even just in December alone when crypto prices started to go up. So all of that is easily accessed. The bigger, more interesting question will be, So we believe fundamentally, based on our revenue and our guidance and everything, that this stock price should be a lot higher. We're getting a lot of traction with the Roths, the benchmarks, the whomever who all want to take us marketing and meeting U.S. institutions. The bigger question will be, if we get to that $2 threshold for the NYSE, who in the U.S. will we use? And at that point, I think we're going to have to bite the bullet and pay $1 million for one of the big 3 U.S. audit firms. But we've got the cash flow to do it. Yeah.
I think that's how your price is 8 cents per share on the stock.
No, it's 50 cents US. It might be 52. It might be 49. Yeah. 2 years ago, we were at $4. A year ago, we were probably at 25 cents. Guessing, but somewhere around there. $4 was when Bitcoin was 40,000 and went up to 60,000. And then the 25 cents and lower was Bitcoin going down to 16,000, after FTX and whatnot. And now I would argue we're in a much more stable Bitcoin environment, even though you've seen some sell-off now ahead of Powell. But I'm being shut down. All right, thank you, everyone. I really appreciate your time.